As the economy continues to fluctuate, your portfolio may be doing the same. It may be a cause for concern, but if you make the right moves, you may not have a cause for panic. Joining us now is Rick Bloom from Bloom Advisors, as well as the Money Matters columnist at Hometown Life newspapers. Rick, thanks for joining us today.
It's always a privilege to be here, Tyler. Thanks so much for having me.
Appreciate having you on. So we are in a time in the market where we're starting to see some prices begin to drop back down to more normal levels, or at least even themselves out. Particularly gas prices, they're down around $4 per gallon in the state of Michigan. We just had earlier on in our headline segment today mentioned that there's projections that could go at some point under $3 in the coming weeks or the coming months, and so that may be it may be a cause for some positivity as people are looking out into the market at this time. That being said, inflation is still at a record high since 1981. It hasn't been higher, and that's definitely affecting the financial markets as well. At this time, since we've last spoken just about a month ago or so, how has inflation continued to take a toll on the financial market, and how are you advising then your clients to approach their portfolio and managing their investments, knowing that the economy is still kind of in a state of flux?
Well, there's a couple things there, Tyler. First of all, inflation is still a major problem, and it's going to be a problem for a while. The numbers that are coming out are showing that inflation is still very high. And yes, we're getting some relief on the gas prices, but not on groceries and some of those other things. So it's going to continue to be a problem. That being said, July was a good month for investors. If you look at it, the S&P 500 was up 9%. The Dow was up about 6% in the month. So despite some bad economic news, markets can still perform. What I always tell clients is that this is not gambling, and you do not look day to day. You're meant to invest in markets for the long run. And when I say long run, I mean you should be in the markets for at least 5 years. If you only have a 1 year time frame with your money, you don't go into the market. So what we always talk to our clients about is long-term goals and objectives, and not to let short-term discomfort cause long-term pain. Because a lot of people, their initial reaction is, I have to do something with my portfolio. I better sell before the market drops. And they miss out on opportunities. Again, take investors that just missed out on July, where the S&P was up 9%, recouped a significant portion of their losses. So investors need to be patient. And the other thing is, investors can't just watch the news and think that's what they should do with their portfolio. It's a mistake to think day to day you should be making adjustments to your portfolio. Have a long-term game plan and stay with that game plan. Don't start letting fear or greed dictate your investment decisions.
If people are in a situation where their finances may be a little bit more in flux, maybe they have recently lost a job, or they're in between jobs, maybe they're underemployed, but they have some investments that they've made that may be able to cushion them financially a little bit. What actions should they be taking to keep themselves financially afloat, pay those bills that they have to pay, those necessities, but also not entirely take themselves out of the market in order to make ends meet?
I think the first thing is everyone needs to get a hold of their expenses. I find, and I sit down people all the time, I see people with 5 streaming services that don't even know they have 5. So I think the important thing is for people first to get a hold of their expenses. What can they cut? What don't they need? And then if they're still running short, that's when they should start dipping into their portfolio. But I would tell people be very cautious about taking from 401k plans, IRAs. That's your retirement money, and it's sacred. You need to keep that long term. What other things people can do is look at refinancing their debt. A lot of people have 20.5% interest rate in their charge cards, and they could shop around for a lower interest rate charge card. And people should be doing that, taking these steps. And it's just not one step that will change your situation, but 2 or 3 different steps can really improve your situation. Look at refinancing your debt. And also, what I tell people sometimes is that are in severe debt problems, maybe you do have to go into bankruptcy, and maybe you have to have a fresh start. People shouldn't be embarrassed about bankruptcy. Corporations do it all the time. And it's a tool that people can use. You don't want to use it half heartedly, but if you're in severe financial shape and really there's not a lot of good ways out, bankruptcy is an option for many people. But the most important thing for people these days, get a hold of your expenses. Really focus like a laser on those expenses and look for ways to reduce it.
We're joined by Rick Bloom. He's a financial advisor at Bloom Advisors, as well as a columnist at Hometown Life newspapers, joining us on the Oakland County Megacast. Rick, it's another time of the year where we're beyond tax season, but we're also in the season now where people are getting some follow-up messages from either the IRS or from the state of Michigan. I got one from the Treasury Department looking, and at the state level, looking for just some basic follow-up information on a couple of different things that I applied for on my taxes this year, and it was an easy follow up. For those that are getting more attention from the IRS and have not followed up yet, what is your advice to them on the timeline of doing so? Because the longer you take, really the more pressure you're going to be under with the
No
IRS or
question.
with the state.
My number one thing is to tell people, do not ignore taxing authorities. If you get a letter from the IRS, the state of Michigan, take it seriously. Now, what you should also never assume that the letter is correct. The IRS admits half the letters they send out are wrong. So just because the IRS says you owe money doesn't necessarily means that you owe the money, but it definitely means you have to respond. If you don't respond, and they're going to assess you with more penalties, and you're going to lose any rights you have. So do not ignore the IRS. And I would always tell you, even like people sometimes will not file their tax returns because they don't have the money to pay their taxes. File those returns, even if you can't pay the taxes. And I know this may sound crazy, Tyler, but the IRS is becoming friendlier to work with. You know, they'll set up payment plans for you, they'll work with you, but you have to respond. In my career, I've never seen the IRS friendlier and easier to deal with than they are now, especially for people who owe money. So you shouldn't just hide. You should try to work with the IRS. There's payment plans, all sorts of things these days, but don't ignore them. It's the worst mistake someone can make.
And on that note too, as people are getting those messages, it also opens up another time for scammers to go after their information and try to take over their finances by getting some of that personal information that may be sought by the IRS. As someone that is in the know of the financial world and of the tax world, as you are, Rick, what sort of red flags should people be looking out for if they're getting contacted by the IRS or getting contacted by the IRS
Right.
and looking for their information?
Well, one, the IRS is not going to call you. So unless you've had a dealing with them. So if you get a cold call and it says IRS even on the caller ID, ignore it. It's wrong. If you get an email from the IRS, it's wrong. The IRS does an email. So you know right off the bat, if you get a call or an email, it's a scam. I had one with my mom a number of years ago where they called her and told her they're on their way to arrest her if she doesn't give them the charge card, and people can't fall for that. The IRS doesn't do that. So you know it's a fraud right off the bat if you get a threatening email or a threatening call. And I always say, if you see IRS on your caller ID, don't even pick the phone up. It's not worth it. These scam artists are good at what they do. They really are, and they know how to get under your skin and to scare you. Don't take the call. But if you get a letter from the IRS, then you want to respond to it. That's how the IRS initially contacts people, is through the mail. It's not through email, and it's not through phone calls.
We're joined by Rick Bloom. He is with Bloom Advisors, joining us on the Oakland County Megacast. More information can be found on bloomadvisors.com. You can also read his Money Matters columns in Hometown Life newspapers as well. Rick Bloom is with us on the Oakland County Megacast. Rick, we've seen in the past several weeks here in Oakland County and in places across Michigan some really pretty tragic losses of life that happen fairly suddenly. And that's brought up to me the importance of discussing estate planning, particularly on your finances. For you as a financial advisor, you're talking with your clients of all different ages. How important is it to, even at an earlier age, as you're getting control of your finances and your financial situation, your financial future, to have a plan in place in case you aren't able to eventually taste the fruits of your labor?
It's huge. It's huge. I cannot tell you how important it is for everyone to have some sort of estate plan. It doesn't mean if you have to have a lot of money or not. As an example, you could be in your 20s and now you have a child. Well, you better make sure you have a will so you can name a guardian to take care of that child if you can't. I always tell people the reason you do estate planning is not to save on taxes or to avoid probate, which are good. The main reason you do it is because you love your family and you want to make sure that when you're no longer here, the family can go on without you and make it as easy as possible. And so everyone needs a will. And I'd also tell you in Michigan, everyone also needs a medical power of attorney. So if there's a family emergency, someone can step up and make decisions for you. And the nice thing is, not everyone has to spend hundreds or thousands of dollars to do an estate plan. In the state of Michigan, we have something called the Michigan Statutory Will, which is a free fill in the blank will you can get through the state, all sorts of places. It's a very good will for straightforward estate planning needs. And nowadays, there's a lot of estate planning you can do without, again, going through a lawyer, naming beneficiaries. I always say people should go through their 401ks or life insurance policies, IRAs, to see who they've named as primary and secondary beneficiaries. And if they haven't named someone, name someone. So there's lots, it's just so important to do estate planning. And, I always emphasize you do it because you love your family. We all know death is going to occur. It always occurs, at the wrong time. It's always emotional. Make things easier for your families and do some sort of estate planning. And you'd be surprised how good you feel when you've done it because you've taken care of your family and your loved ones. And particularly for people that are in non traditional relationships, those estate plans are even more important to protect your significant other.
Joined by Rick Bloom. He is a financial advisor with Bloom Advisors, also a columnist under the Money Matters column in Hometown Life newspapers, joining us on the Oakland County Megacast. You can find more information and get in contact with Rick and his team at Bloom Advisors by visiting bloomadvisors.com. That's bloomadvisors.com for more information. Rick, another couple minutes with you today before we'll say goodbye. Any other advice at this time on the financial markets, on investing, or other matters that are of particular importance to our audience at this time that we haven't discussed yet today?
Well, I would tell all investors this is a great time to invest. The market is on sale. When stores are on sale, that's when I want to go shopping. So for people that have been sitting on the sideline, can markets go lower? Sure, they can. But you can't, it's like buying something on sale. You can't hope to buy it at its lowest price. You want to buy it at a fair price. Markets are on sale. If you're a long term investor, you should take advantage of it. Also, with the down market, a lot of investors ought to look at converting traditional IRAs into a Roth IRA because the benefit of that is that money now grows tax free, not tax deferred, and it's not subject to the 72 years old minimum required distribution. So I'd say look for opportunities to take advantage of this market, and converting existing IRAs into a Roth IRA costs you some money in taxes now, but potentially can save you lots of money down the road. And I would always tell investors, don't panic. Don't panic. We've been through these times before, we get through them. So don't pay attention to the day to day, the political talk, and believing what the politicians say. Take a step back from that. Focus on long term, and don't let fear dictate your investment decisions.
Hometown Life newspapers for his Money Matters column as Hometown Life newspapers from Rick Bloom. Hometownlife.com to read more of Rick's financial advice in Hometown Life newspapers. You can also get more information and some advice from his team at Bloom Advisors on bloomadvisors.com. Rick, appreciate you joining us.
I appreciate the opportunity. Thanks so much for the privilege to be here today.